Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Bitcoin has come a long way since its early days as a niche asset, and now it's becoming a mainstream investment for Fortune 500 companies like Strategy and GameStop. These big players are allocating billions of dollars to Bitcoin holdings, transforming corporate treasuries into crypto-forward financial operations. We're seeing complex financial instruments being used to gain exposure to Bitcoin, such as convertible notes, structured products, and even Bitcoin-backed loans. This is blurring the line between financial innovation and speculative risk. As a result, the role of corporate treasurers is expanding beyond traditional finance to include crypto expertise, risk governance, and digital asset strategy. The use of Bitcoin in corporate treasuries is no longer just about casual interest or speculation. It's becoming a serious investment opportunity for companies like Strategy, which has built a war chest of 580,000 Bitcoin worth $63 billion since 2020. GameStop, another big player, recently announced it was issuing $1.75 billion in convertible notes to buy more Bitcoin. The Blockchain Group, Europe's first Bitcoin treasury company, has also joined the trend by announcing a $300 million issuance for purchasing more Bitcoin. These companies are diversifying their portfolios and exploring new ways to use crypto, such as structured notes and yield-bearing custodial accounts. However, beneath the surface of this trend lies a complex issue. Are these financial tools being used to serve prudent corporate strategy, or are they a new form of speculative risk? Some critics argue that Bitcoin-linked treasury products may be less about strategic diversification and more about corporate speculation dressed in financial engineering. The accounting treatment of crypto assets is still a thorny issue. With Bitcoin classified as an intangible asset in the U.S., this creates a lopsided risk profile for public companies. So, what is Bitcoin in the context of the corporate balance sheet? Is it a modern hedge against fiat inflation or a speculative instrument that can juice short-term returns but introduces material downside? The answer may depend on the type of business and its risk profile. For some companies, limited exposure to Bitcoin may offer a form of asymmetric upside, while for others, it may be an unjustifiable risk. As we look at the current trends in corporate treasuries and their use of Bitcoin, one thing is clear. This is a rapidly evolving landscape that requires careful consideration and expertise. At Bitcoin Bulletin, we'll continue to bring you updates on this story as it unfolds.